payment is faster. It's not T+2, it's not T+3, it's not blocked. Key player moving into the space with like an acquisition of actually 1 billion won. It's not because you closed it that you activated it. There's a huge gap and difference between closing and activation. Stablecoins, on top of being instant, transparent, and cost efficient, they're stable.
Welcome back to Alliances. There is a hot topic in the fintech and payment space. It's stablecoin, and today I'm joined by Charlotte Thoumy to speak about that. Charlotte, thanks for accepting the invitation and welcome to the show.
Thank you so much. Happy to be here.
Great. So just to start, can you please introduce yourself?
Sure. So my name is Charlotte. I'm 30 years old. I live in Portugal. And I've been in the blockchain, crypto, stablecoin space since 2018. Actually, the whole story started when I was at school, and we had a class on blockchain, and the teacher said it was going to revolutionize how we conduct payments, how we transfer each other value, even the concept of trust in the world we know we have today. So I thought it was super interesting and promising, and I was looking for a topic for master thesis. So I decided to work on private blockchains. That can be quite paradoxical because a blockchain by definition is an open network that is participative and open to everyone, whereas a private blockchain is just like a blockchain that is restricted to the usage of a company or something. So as there is trust, the necessity for a blockchain felt a bit paradoxical. So I worked on the topic during the thesis, and then it opened some door. I went doing some consulting in blockchain for Soprasteria.
Yeah.
So doing a lot of use cases, identification, pilot framing, working on private and consortia blockchains, which is also a bit paradoxical with what I just said. And then I met with Pierre Noisat, who founded Paymium. I thought it would be great to have a startup experience, so doing partnerships there. So it was meaning different things. The partnerships you buy, so in crypto it's quite structural because you need banking partners in order to enable your clients to buy and sell crypto. So it was about finding the right banking partners, working with the right payment providers, like how are you going to deposit cash on the platform with a card through initiation payment and so on. Liquidity partners as well are key for a centralized exchange. You need to make sure that there is sufficient liquidity on the marketplace. But also, I was also in charge of commercial partnerships. So how to drive volumes through distributors. And at the time, I built like the crypto asset management solution where, asset managers were basically implementing trading strategies to beat the market, and they were using Paymium as a source of liquidity. And then I moved to FTX for a very short time, for 3 months, and at that time the partnerships were not core to the mission. It was mostly a retail job, so really driving volume on FTX through traders mostly, so doing some PR, some media management, a lot of influence marketing, because those guys were the ambassadors and they were producing content for retails to learn how to use FTX. And then, we all know how that ended. So after 3 months, I've done freelancing and doing some stuff on my own, trying to go maybe a bit deeper into other sub-verticals, because crypto is quite vast. You have different sub-verticals. You have CeFi, centralized finance, which is where I came from. But you also have DeFi, you have ReFi, regenerative finance, you have decentralized identity, you have community topics, you have a lot of things. So I was really curious to kind of go on focusing on other topics. doing some freelancing on community aspects, which is actually quite useful for managing partnerships today. And then at the time, I knew Valentine from us both being in the sphere. And there was a fit with him. There was a fit with the founders. So I took a job at Fipto, which is where I am now. At the beginning, I was managing channel sales. Today, the job evolved to head of partnerships. So really, really happy to be at Fipto today. Is it the right time for me to introduce Fipto?
Yeah, we can do that. I think you're in a boiling space.
Okay.
At the moment, I see two hot topics. People are always talking about, of course, AI, but also I see so many people talking about, stablecoin when it comes to fintech.
Mm-hmm.
So I think I have a lot of questions for you. But maybe, please introduce Fipto, and then we are going to deep dive into what is stablecoin, etc. So we're going to give some knowledge to people.
Okay, perfect. So Fipto is basically a bridge because in an ideal world, the sender sends crypto and the beneficiary receives crypto. But in reality, you need to interact with your legacy system. You need a place where to buy and sell crypto and to hold them. And that's where Fipto comes into play. Fipto is a bridge that makes the access of stablecoins safe, convenient, and compliant for B2B players, may they be corporates or financial institutions. So Fipto is duly licensed for both legs, like PI in France for the fiat leg, fiat being traditional currencies, and VASP holds different VASP licenses and is about to get MiCA for the crypto leg. So the idea is that we are really trying to make stablecoins accessible in the best way to corporates and financial institutions. In order to do that, we've built the Fipto platform, which is different things. It's payment accounts for B2B players to pre-fund in euro, in USD. It's stablecoin wallets to be able to receive and send stablecoins, but also hold them on the platform where Fipto is a custodian. But it's also the liquidity to swap from one another. That's where we've built an engine connected to the deepest venues of the space to make sure that our clients get the best pricing and the best execution in the payment flows.
Yeah. And you told me before recording that it took almost 3 years to build the product, which is quite a long time, but amazing at the same time, meaning that you have to build everything around stablecoin. Can you explain why it takes so long to build such a product?
Absolutely. I think it's worth mentioning that Fipto is API native. So there is a web app where you can access all the services, but truly everything can be integrated, and that's the value we want to bring to our clients and partners. The idea is also how we work. We aim to work with distributors and to make Fipto available into their own products. So the API component was non-negotiable. And indeed, it took 3 years to build a platform as it is today. So it means, access to Euro accounts, USD accounts, so integration with banking partners. The idea also in crypto, it's really key, this concept, because now we have regulation clarity. You face a lesser risk being in crypto of being debanked by your banking partner, but at the time, risk mitigation was not an option. It's what we are trying to do at Fipto also. We are trying to mitigate our clients' risks by integrating with various banking partners, giving you the best of the both legs, actually. So you have the banking partnerships that took a while to identify and integrate. On the second leg, you have the crypto custody. So it's not only about, we work with Fireblocks, but it's not only about integrating Fireblocks, it's about building the logic on top of it to make all pay-in, payouts and settlements more broadly absolutely optimal on the platform. And it takes a while, of course. And it's also like the liquidity partnerships. It's about integrating with the deepest venues of the space and the time to compile and compress your volumes and to get the best pricing. And on top of that, you have a B2B layer that enables any client to kind of replicate their governance rules directly into Fipto. So the idea is we really approach stablecoins as another currency, just a more efficient currency. But the idea is that we want to make the client as comfortable as he is in traditional finance with stablecoins. Stablecoins being, again, just another currency, a dollar that moves at the speed of blockchain. So all those components, along with enhanced security features and everything we've built to replicate traditional business, fintech business, took 3 years to build, and it's still growing. It's a continuous job to be able to provide the best banking partnerships, the latest stablecoins. Even though the market is quite focused on USDC and USDT today, it's really the promise to bring the best of both worlds within one platform.
Yeah, and I see so many players now coming into stablecoin because I think that's the big next move for many players.
Absolutely.
But I see so many notions there, but maybe for the audience, maybe some know Bitcoin, Ethereum, etc. Can you define what's a stablecoin?
Yeah, sure, that makes sense. So maybe before defining stablecoins, it would be worth even talking about blockchains. So blockchains are trustless network where any member can send value to another member. So the two members don't have to know each other because by definition, a blockchain is trustless, meaning that we can take the basic example. When Alice sends 10 euros to Bob, what's going to happen is that all the members of the network are going to get the information that Alice spent 10 euros to send it to Bob, meaning that Alice can no longer double spend the 10 euros. And because everyone has the same information on the network, and it's immutable because you cannot hack all the nodes of the network at the same time, the network is trustless. So the bigger the network, the more decentralized, the more secure it is. And it enables any member to kind of send value to each other without going through a bank, without going through a trusted third party, whatever it is. So that's the revolution. So the value you'd have, Maxime, to use a blockchain would also be that you can send any amount at the other side of the planet instantly for a very low cost. The only cost being the gas fee you're going to pay, which is the fee you're paying to guys actually maintaining the network. But other than that, you can send billions to the other side of the planet in seconds. And that's just a superior technology when it comes regarding payments, So any blockchain transaction, by definition, is instant. It's transparent because, again, every member of the network has the same information. So you can connect on Etherscan, or if we are talking about Ethereum, which is a blockchain explorer, and you can enter the transaction ID, which we call transaction hash, and you get the information of who is the sending wallet, who is the receiving wallet, when the transaction was processed, and so on. So you get all the information you need in order to know exactly where is the transaction. And finally, it's instant, it's transparent, and it's cost efficient. So you would understand why people are starting using Bitcoin, Ethereum to send value to the other side of the planet. Especially because when you're in traditional payments, usually it's not only bank A and bank B that are involved in the payment flow, because you're talking cross-border payments with destination currency that is different from the origin currency. There are some correspondent banks involved, which make the whole payment process longer because potentially the destination currency is a non-deliverable currency that cannot be exchanged directly against euro. So you need to go through USD. You need to go through the United States. You have different cutoffs. You have more fees. It's even less efficient. It's not really talking about domestic payments, really about cross-border payments, especially when dealing with emerging markets, where you find a lot of non-deliverable currencies. Sorry.
No, that's cool. And you're speaking about wire transfer, but you have also in the card payment some players like Scheme, like Visa or Mastercard. So it's complex also the current world of payments.
Yeah.
So yeah, with a blockchain, it seems to be easier to make a payment.
Absolutely. So it's easier, and it's even more valuable when you're doing processing cross-border payments, which is the initial intention at Fipto, is really to solve for cross-border payments inefficiencies. But the problem you might have is that Bitcoin and Ethereum are volatile. So you might want to benefit from a stable currency, which is where stablecoins come into play. So stablecoins, on top of being instant, transparent, and cost efficient, they're stable because they're going to replicate the price of an external asset. So the main stablecoins are USDC, USDT. Those replicate the price of a USD. So it means that now you can move dollars, you can hold dollars, send, receive dollars at the speed of blockchain everywhere in the world for in a cost-efficient way. So it opens up a lot of opportunities for any corporates, but also fintechs to provide corporates stablecoin-powered services.
Yeah, and today what I see also in the market, and maybe you're going to learn me something around that, but I see so many American players like Tether or Circle issuing USDT or USDC. But when it comes to euro, I think Société Générale or some other bank players have a stablecoin. But from my point of view, most of the market is based on USD stablecoin. Am I wrong, or is that the current market?
It's absolutely true. So if I'm not mistaken, I think the total cap of stablecoins today is around 300 billion, where USDC and USDT hold for 75% of the volume. So it's not even like only USD stablecoins, it's like USDC and USDT. USDT, it's 60% of the cap. So yeah, although the market could be seen as quite fragmented because there's a lot of stablecoins now with the Visa tokenization, VTAP, Visa tokenization asset platform. A lot of banks are starting to test launching their stablecoins. It's mostly at the stage of pilot and experimentation. I'm not saying that we'll have all banks replicating what Société Générale did with the EURCV, but you're absolutely right. Today, the issuing and the liquidity is concentrated on USD stablecoins, and even though we're seeing some initiatives in Europe, private and public, the volume and the liquidity is not close to what we can find on USD.
Yeah, and is that a problem for customers? Because I saw, I see, a monetary topic behind that with the domination of the USD versus the euro or other currency. But when you move money, it's not actually a problem for your customer because it's going to be exchanged between stablecoin and then maybe then change into a new currency like euro or another one.
Yeah, well, you have two main flows on stablecoins. The first flow is one I know you wanted to talk about, which is the stablecoin sandwich.
Yeah.
And there is a second flow, which is a stablecoin payment. So in the first flow, in the stablecoin sandwich, the stablecoin is just bridging two bank accounts. So you have a source currency, let's say euro, that you're going to convert into stablecoins. You're going to push the stablecoins abroad, and then you're going to convert it back to fiat currency, for example, BRL in Brazil, and then you're going to pay out to the beneficiary's account. The value is that both the sender and the receiver only dealt with fiat currencies. So they remain in the same fiat referential, yet they benefited from an accelerated payment flow. On that flow, if you're using USDC, for example, you have absolutely no issue. There is really good liquidity on euro to USDC, and there is good liquidity on BRL against USDC. So it's super straightforward. So it doesn't compromise the performance of the payment. If you're switching the USDC with another euro token, you will face some problem at this. The first leg should be okay because there's still some liquidity. The second leg, where you're going to convert the stablecoins into fiat currency, might be problematic because you need distribution locally. for the euro token, which is not as developed as on USD stablecoins, and you need sufficient liquidity to build use cases and scale use cases, so for that aspects, even in a stablecoin sandwich flow, we use a USDC. And then on the second flow I mentioned, the one where you're going to push fiat, you're going to on-ramp, which is the term to say that you're going to convert the fiat into stablecoins or crypto in general, and you're going to push the stablecoin to the beneficiary. You're not limited anymore by the geography because, BRL is in Brazil, but potentially a euro stablecoin could be received anywhere where the country allow the use of crypto. But you need acceptance at the level of the receiver. And that's, it depends. Maybe it does make sense for offshore companies to hold euros in for a lot of reasons. If they don't want to be exposed to the volatile local currency, but then they cannot use it locally. They cannot use it to pay their bills and so on. So it really depends on the usage. If they are looking for a hedge against their local volatile currency, it does make a lot of sense. But if they're looking for an inflow to pay for their local activities, it might be more challenging.
Yeah, and how do you see the market at the moment? Because that's quite changing. Maybe to onboard a corporate and make them accepting a stablecoin. Do you see a resistance in the market at the moment?
For corporates?
Yeah, meaning you told me that you must onboard the receiver to accept a stablecoin, if I'm not wrong. No?
No.
Okay.
You don't need to. No. The value, it's open looped. So you don't need to onboard. It's just like the destination. The receiver needs to want to accept, to hold a euro stablecoin.
Okay.
And if he's not using, he cannot use it locally. It might be more
challenging to accept it. Yeah.
Exactly.
Yeah, okay.
You can meet, but no, we don't need to use. Actually, that's also the value of using a stablecoin sandwich is that you can push. Like Fipto manage the first leg, euro to stablecoin, and we work with partners to manage the second leg.
Okay.
So we have access to local payment rails, so there's no restriction to the bank we can pay out to.
Okay, no, that's clear now. I didn't understand everything, but that's super clear. I also wanted to speak, on the market because we have seen some big players like Stripe buying Bridge like for 1 billion, if I'm not wrong, then Privy, meaning that if I'm not wrong, they are planning to do the settlement in stablecoins, Terra, and onboard the customers into this new raise. That's a big move. Do you see the market moving into that direction?
Absolutely. We were discussing it before, but now every event you go to, stablecoin is definitely a buzzword. I think it's safe to say that more and more PSPs and fintech operating in this, even in traditional payments, are adopting a stablecoin strategy. They're looking into the topic. We're trying to help them in understanding their challenges, size them, and explore how stablecoins could be a fit. But if you're a PSP and you have activity abroad, especially in emerging markets, it's very likely that your stablecoins could bring value to your flows, and the industry realized that. And actually, you're right. It's by those kind of moves that the industry moves exponentially fast. Like there was a slow start, but there are those moments, those very big moments where there's like a key player moving into the space with like an acquisition of actually $1 billion. Absolutely, it brings a lot of interest, of course. It also creates FOMO, fear of missing out, because the PSP that are not looking into the topic today are, I think, quite aware that they should have at least, they should run some pilots and so on. So it definitely accelerated everything. Yeah.
Yeah, and I see, maybe I'm wrong, but a parallel with AI. So many people of course, are talking about AI today because it's a revolution. But if I take the example of a B2B SaaS,
Yeah.
the pricing model used to be on seat. So yeah, the pricing was that. Then today is more on usage or maybe resolution, but also for payments. So if I understood well, it's cost efficiency to use a stablecoin, because if you're using blockchain new rails, it means that it's cheaper for also PSP or players to process payment.
Absolutely.
Is that correct?
Absolutely. Again, there's those two flows. There's the flow where I'm coming back to that because there's a nuance to bring here. But on the stablecoin sandwich flow, as you're falling back into a fiat referential on the second leg, you'll also experience a second FX cost and potentially the price of the liquidity that might not be as good as you'd want it to be. So the total cost of a stablecoin sandwich flow includes the pay-in, the payout, the two FXs, and the transfer. But the real cost is the cost of liquidity. Whereas in the stablecoin on the stablecoin payment flow, you have really good liquidity on Euro USD to stablecoins. So the FX is super attractive, and as you don't have a second fee, a second FX, we can say that stablecoin payments are super cost efficient.
Yeah, and do you see players, now changing from Swift to stablecoin? Is there a big move, or is that completely different, for processing payments internationally?
I think for a while, legacy systems and stablecoins will coexist. Again, the idea is that you still, in an ideal world, you're just sending and receiving stablecoins, but in reality, you need your bank account to pay for your bills, to pay for your employees, and your employees need to buy bread at the bakery. So you still need some kind of access to your legacy system. So you need those infrastructures. A lot of the international business is conducted on Swift. And I know Swift is actually looking into blockchain, how it could fit its operation, and they're right to do so. But no, for now, I don't think those are mutually exclusive in a sense.
Okay. To make it maybe more clear, can we take some example of your current partnership or customers? You have signed, for me, some massive partnerships with Kyriba, TeraPay, or Worldline recently. If we take each one, maybe we can develop just to have a better understanding of the partnerships and how it works on the payment side. If we start with maybe Worldline,
Sure.
What's the case and how it works with you?
Absolutely. So Worldline is the latest signed. Really exciting because those guys are huge. They have a presence everywhere. So it's an opportunity to test and scale super fast and see what works, what doesn't. So really excited for this one to start. So typically with Worldline, Worldline is a PSP and has a lot of different entities as a global PSP. But they have an entity called Global Collect, which is the one providing acquiring services to merchants. So basically, a merchant using Global Collect can collect everywhere in the world and will be settled. I don't know exactly what's the settlement delay, but I guess T+1, T+2, with all the acquiring revenues through one single transfer. So at Fipto, we typically support PSPs in settling their merchants in stablecoins. So Worldline is acquiring in Europe, but for different merchants, some merchants are located in Europe, in which cases the collection happens in euro and the settlement happens in euro. But some merchants are located in emerging markets, in Asian countries, in Latam, in Africa. And those merchants would potentially rather receive stablecoins. because they would rather be exposed to USD rather than the local currency, because they benefit from an instant settlement, because it's cost efficient. It's and potentially they would want to hold stablecoins, or they want to convert it back to fiat. And in some countries, there is an opportunity pricing. I'm kind of I'm bringing some nuance to what I was saying before, but in some countries, selling USDC against local currency present a pricing opportunity. So for one or many reasons, those merchants would rather receive stablecoins than local currency. And that's where Fipto comes into play. We enable Worldline to pre-fund in euro, convert into stablecoins, and push the stablecoin transfer to the interested merchant. So super excited for this one to start. Great team, a lot of things to explore. Today we are focused on this use case, but also might be exploring in the future how we could enable Worldline to pre-fund their PSP partner into stablecoin or receive stablecoin settlements, which is a good transition to what we are doing with TeraPay. TeraPay is a major remittance network serving the likes of Western Unions, enabling PSPs to access huge payout distribution networks in the world. And typically we've been working on the partnership for more than 18 months. 18 years would be a lot.
In the future, yeah.
18 months. And it was a really super interesting one, because we started with TeraPay not having implemented or tested stablecoins at all in the past. And they were really looking at the topic with a very open mindset. So we supported them in kind of understanding which use cases could make sense, proposing a pilot approach, and starting with stablecoin sandwich flows. Because TeraPay gets funding in Europe, and they need to fund their partners in Cameroon, for example. So how could stablecoins be a fit in accelerating and providing just a more cost-efficient payment flow from Europe to Cameroon? So this was typically a flow that we started testing with them, also in Philippines. But very soon, what we saw is that TeraPay was innovation-driven, of course, and they kind of leapfrogged the stablecoin sandwich flow to stablecoin native flows. Usually, you have a use case in the middle where the PSP only converts in stablecoins what needs to be converted to conduct the payment. But TeraPay, what they did is they said, no, I want to hold everything in stablecoins, and I'll convert it back to fiat only if I need fiat to access fiat. And this is where we see innovation happening. By remaining only in a stablecoin referential, they get access to 24/7 pre-funding for them and their partners and their clients, of course. So they really benefit from the value of stablecoins, and they can do that while replicating their own workflows again on Fipto, because they have this enterprise grade layer that enables them to grant control-based access to FA, multi-signature, these kind of rules that you need in order to conduct international treasury flows at the level of TeraPay, this is their job, right? So super exciting to be there from the beginning to now, which is not the end. And exciting to see that, because they're a network, essentially, they're connecting PSPs, like the Western Union likes, but also payout partners. It's a connector. And seeing the connector adopting stablecoin rails make the whole network more efficient. So it's super exciting, because for this kind of actors, having idle cash blocks everywhere, it's a huge cost. Treasury-wise, it prevents them from scaling. So adopting stablecoins, we've seen massive value, and we see their flows ramping up super fast.
Yeah, and it's cost efficient. Yeah, super interesting. And when it comes to Kyriba, I know it's a treasury management system.
Yeah.
How does it work today? Because it means that some corporates, some B2B are requesting or needing a stablecoin to process payments. How does it work with Kyriba?
So Kyriba is a little different because it's a technical integration, whereas TeraPay and Worldline, they're in the payment flow because they are PSPs, they hold licenses. It's not the case of Kyriba. So really Kyriba, it's more of a distribution. We operate as a payment module in their marketplace. We're like a connector connecting corporates to stablecoins. It's like a bridge. Fipto bridges the fiat and the crypto world, and the integration of Fipto into Kyriba bridges our clients' treasury management systems and treasury flows with stablecoins. So it's really like an open door to stablecoins. So today, there were 2 steps to the partnership. First, we launched with stablecoin sandwich flows because, Kyriba clients are mostly big corporates. So those big corporates are not the ones that are the closest on the adoption curve, especially in Europe. Today with Genius, we see that US corporates are massively adopting stablecoins, or at least experimenting. In Asia, it's a no-brainer. In Europe, adoption among corporates might be a bit slower. So incorporating a stablecoin in between a synthetic pair, fiat to fiat, the stablecoin sandwich flow made a lot of sense because you're basically telling them that the sender still sends euro, the receiver still receives BRL. We are mobilizing a stablecoin in the middle to accelerate the payment flow, to make it cost efficient, depending on the size of the company. Sometimes huge corporates, they have so good prices that potentially the stablecoin will be more expensive than what they already have. So it's also like a component to keep in mind. But the value that is that is constant is that the payment is faster. It's not T+2, it's not T+3, it's not blocked. It's instant to 10 minutes, depending on the partner. So that's most of the conversation we've had with Kyriba clients were along those lines. But the reality is that you're always, in order to close or to activate, you need sufficient return on investment. And you need also trust, from the counterparty to jump on a new technology. And I guess the difficulty, which is not impossible, but the complexity relies in the fact that on the stablecoin sandwich flow, the ROI might be just a bit too marginal to provoke the jump to change. So for that reason, we've recently extended the partnership to stablecoin payments, where we consider stablecoin no longer as just an intermediary currency, but also as a source and destination currency. And that opens up a lot of use cases because now corporates from Kyriba can send, receive, hold stablecoins that are managed on the back end on Fipto. So it brings, a lot of opportunities, and it's super exciting.
Cool. So 3 different use cases. Do you see other use case at Fipto that could be, possible with your platform, or only, the 3 cases that you mentioned, or I would say the ideal customer profile?
No, those are definitely the use cases that we're trying to push. So it's good that we sign partners in order to on those key use cases. There must be a last one. So if you take the whole payment flow, you have the collection of funds, you have potentially an intermediary step, such as with TeraPay in the case of a cross-border payment, and you have finally a payout. So the ones that collect, we help in settling their clients in stablecoins. The one that settle in the middle, we give access to stablecoin rails. And the last ones, we can also offer access to euro rails and on and off ramping capabilities. So it's really about serving the whole payment value chain with a specific B2B mindset, meaning that we're mostly looking usually at daily settlements of treasury large, more treasury settlements than retail payments. We don't do retail, but it's quite focused. We are quite focused on, usually on a high level standpoint. There's usually a conversion and a payment involved, but looking at it more deeply, you know, than anyone, that there's a lot of complexity, and that's what we are trying to abstract to the eyes of the client.
Okay, cool. Let's talk about partnerships now.
Yeah.
Because you joined quite maybe 2 years ago.
A bit more, yeah.
So, yeah. What was your first move? Because it was quite new, still building the platform. What did you do when you just joined Fipto?
That's a good question. So what did I do? I kind of did a diagnostic, like what's going on a partnership at the partnership level. What are our options? Do we want to go for technical integrations? What's the opportunity from the PSP the PSP ecosystem? So kind of listed all the potential pockets of opportunity, sizing them, placing them on an adoption curve, and going for the ones that meet where opportunity and maturity on the topic met, and that was the PSP pocket, of course, because PSPs are kind of forced to adopt stablecoins because their clients are asking them to, which is not the case of bank, which is not, it was really the natural target for Fipto. So then it was about understanding, because the PSP ecosystem, and because I know you were at Lemonway, it's huge. You have acquirers, you have networks, you have marketplaces. Every single PSP is different from its activity, its clients, and its geography. So it was really about trying to find the flows where we could bring value, and then identifying those partners and then going for them. So the whole definition of use cases and took a little while, because you want to go where the discussions get you, and there was a lot of stablecoin sandwiches, and it was a long time coming back from that, refocusing and repurposing around stablecoin payments as a whole. And it took also a while for merchants and at the end retailers driving merchant adoption to the demand also took a while being created, but today we are at a momentum where every planet kind of align, so it's quite thrilling to be at that stage.
Yeah. And how did you create the demand? Because you said there is a lot of PSP, of course, but you need to make sure that your product is highlighted to PSP, etc. How did you do that job? Because it's not that easy when it's a technical topic and also a new one. How did you do to convert PSP into customers? Partners, actually.
I think there's two answers to this. Like the big ones take a lot of time, because there's a lot of evangelization to do. You need to meet a lot of people. It's like huge structures, so it's not about having one ambassador. It's not enough. You need to talk to the guy in the strategy, to the guy in the treasury, to the FX team, which is different from one geography to another. So especially when you're in a pilot mindset, where you want to kind of make them test different use cases, it's at least one or two teams different at each time. So that's why TeraPay took so long. It's because those accounts need to be mapped and worked and nurtured, and it takes a lot of time. But smaller ones, especially the ones already having stablecoin payment flows live, are quite easier to work with, which is mostly a sales topic. The partnership mindset we have with maybe the bigger ones, where there's this kind of logic to co-build something, where it's kind of a blank page. They're like, okay, we want to do stablecoins. What are you seeing on the market? And we're feeding the conversations with insights of what we see, what the conversations we have, the flow we see going through on the platform. And it takes a little longer, but it's also, in my opinion, more thrilling, because, again, this logic of co-build is super, super interesting and thrilling to adopt.
Yeah, and what I hear is that you're very close to sales, because you're between sales and partnerships, quite close. How do you work with your sales team internally?
really well because Fipto, we are a small team,
Okay.
so we are all super close to each other. So no, it works. I think it's also part of the fun, I guess, is that even the organization is a living one, and it's dynamic, and depending on what's happening, we can adapt. So yeah, everyone in the team holds different hats, and it's it's a really good, easy collaboration, I guess. There's the topic of going to markets where you prepare the offer, and then once you feel the fit, you scale it. So it's more a sales topic from there. So yeah, it's thrilling to be in a small structure because you have the opportunity to do a lot of things and to learn and to also to fail, and it's a lot of freedom, and I think it fits everyone in the team.
Yeah. And also, I see that, partnerships, we were talking about that, before recording, that, we are in touch with all departments internally, because you have to talk with product, with marketing, with sales, etc., customer success. How do you work with different team internally to, build your use case and make sure that all teams are involved, but also, going 100% behind you on the project? How do you build that trust internally also?
I think it's a very, very good question. I think it took a while, and it will always be an ongoing topic. How do you optimize the level of communication? How do you optimize alignment? Being a half remote company, I think it's maybe something that can be obvious, but it's not. Is like being the right size, having the right department involved in the alignment process. We today have we align on a regular basis to make sure that product, compliance, sales, partnerships, marketing, tech are aligned and all looking at the same direction, which is quite critical for a small structure at the stage we're in. So I think on an organization standpoint, it took a while to find the good recipe, but today it's implemented. So it's the right level of alignment, both physical and digital. It's also making sure that once we've identified an opportunity, there's green light all along the table, like compliance-wise, we know which framework to adopt. On the business side of things, we know there's an opportunity to grasp. On the product standpoint, it's something that is already available, it will be available, and at which with what at ETA and so on. So yeah, it's how we do it.
Okay, cool. So yeah, on another topic, Charlotte, I see that, in payments, everything is integrated, distributed. So it means that you must share value with your partners. How do you share this value with your current partners?
That's a really good question. So I was describing the payment value flow earlier. So if we take the first step, the collection of funds, the PSPs that are involved in the collection of funds are already generating revenues for the services they're offering. But what we are offering them essentially is to generate even more revenues. And in this ecosystem, margins can be quite tight. So that's how we got their attention at the beginning. What drove us to this use case was that we were seeing merchants using Fipto in order to receive funds from acquirers and on-ramp and pay out to their own wallets. So that's where we started to have the conversation with partners saying, hey guys, if you do that, you're going to generate way more revenues on the same payment flow. If we work with you, we have more volume. So it meets everyone's needs, and the merchant gets settled in stablecoins. So for him, it doesn't change a thing. It's optimized user experience. So for the whole chain, it brought value. So that's how we presented it from a partnership perspective.
Okay, super interesting. Super interesting. And what's your key learning, after more than 2 years at Fipto? What have you learned, on partnerships and on your job?
So many things. I would say, and we discussed it before, that it's super obvious and maybe even a bit dumb, but I will say it anyway. It's not because you closed it that you activated it. There's a huge gap and difference between closing and activation. And a lot of planets need to be aligned in order to activate. It's not about the distributor being mature. It's also about, of course, the end user being mature and reachable. It's not only about everyone being mature, it's about you being able to reach to the end user, for him to know for a fact that he can use your services through your partner. So the activation piece is definitely the one that is top of mind today. That is raising a lot of questions and demanding some energy both on the technical and on the PSP model. But it's also part of the thrill. We know that the answer is composed of there are different variables to play with on the marketing, on the sales, on the product side of things. So we are also working on that topic. We are writing a playbook on that aspect, and I'm actually super curious to connect with other members of other viewers if they have any similar problematics. I'd be happy to have a chat.
Okay, cool. Before to wrap up, I always ask this question now. What do you want to see on this show? What would make sense for you to see or listen?
It's gonna sound familiar, but I would love to listen to someone who cracked the activation on the distributor model, and to get best practices there. It's also going to sound familiar, but would love to see how partnerships in AI are evolving today, which is maybe an even buzzier word in the ecosystem. So in the payment ecosystem. So excited to see, to listen more about this successful activated distributor model and about AI, I guess.
Okay, I'll definitely make some connections with some people. So just before closing, how can we partner with you? How can we find you, Charlotte, on socials?
I'm on LinkedIn, which might be the easiest way. So Charlotte Thoumy. I guess we can share the link.
Charlotte, thanks a lot for your time. It was great welcoming you. I think we have learned a lot of things around the stablecoin and how it's used in the payment space. So thanks a lot for that. As always, I'm inviting you to share this episode and subscribe to Alliances. It helps us to get discovered. And I'll be happy to welcome you for our next episode with a new guest. See you soon.